Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 20th of July. IMF cuts world growth forecast again. The International Monetary Fund revised down its forecasts for global economic growth this year for the third time, as the unexpected UK-EU divorce unleashed a new wave of uncertainty amid an already fragile business and consumer confidence. According to the fund's World Economic Outlook update, the Brexit vote increased economic, political and institutional uncertainty, which is expected to have negative macroeconomic consequences, especially in advanced European economies. Had not been the Brexit, the fund said that the global growth forecast would have been left broadly unchanged and even risen slightly for 2017. As for the UK economy, the fund now expects it to grow 1.7% in 2016 from 1.9% previously, and to slow to 1.3% in 2017 from 2.2%. All the forecasts were contingent on the assumptions that the referendum uncertainty would gradually fade out and that the EU and UK would manage to avoid a large increase in economic barriers. Even though the real effects of the Brexit vote are still largely unknown, the risks to the IMF's forecasts are to the downside. If the financial market conditions deteriorate and consumer confidence is weaker than currently assumed, this will result in a further slowdown in global growth. If this is the case, then demand for the safe havens could remain intact and a sell-off of pro-risk currencies may be triggered. The Turkish lira plunged on Tuesday on reports that the country's government has dismissed numerous education staff. Given that the political disorder is still undergoing and there are no clear signs of an end, the lira could stay under selling pressure at least until the overall turmoil settles down. As for today, the European calendar is very light as we mostly get second-tier indicators. The most important release we get is the UK employment report for May. The unemployment rate is expected to have remained unchanged, while average weekly earnings are forecast to have accelerated. Given that the nation's CPI rate remained unchanged from April to May, this will point to accelerating real earnings, something that under normal circumstances would benefit the pound. However, as this report concerns the pre-referendum era, we believe that it is possible to have limited impact on sterling, as the CPI did on Tuesday. As we already noted, UK investors are on the edge of their seats for the preliminary PMI data for July, due out on Friday. This data will provide the first signs on whether and how much the Brexit vote has affected the UK economy. From Eurozone, we get the preliminary consumer confidence for July. This report would give evidence on how the UK's decision to leave the EU might have affected sentiment among European consumers. The index is expected to have declined, hinting slower growth in consumer spending over the coming months. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.